If you are struggling to understand market structure, if you have been an ICT or SMC trader and you are looking for a simplified way to understand market structure and avoid all the complicated ICT concepts of getting you confused on which order block to trade, liquidity to look out for, or you've been a retail trader and after drawing on your trend line, your support and resistance and all other concepts, oftentimes when the market gets to your zone, it blows up those zones like they never exist. Or if you have tried multiple strategies and yet you still confused, you don't know what to do when you come live in the market, then this video is for you. In this video, I'm going to show you my step-by-step guide in which I use to trade the financial market. So yeah, my name is Miracle Anayo and I'm the founder of the PTF Strategy. So in this video, I'm going to show you the step-by-step guide in which how I use the PTF Strategy to understand and trade the financial market. So without wasting much of your time, let's dive straight into the video. So now, like I earlier said, I'm here to show you how I trade the financial market using the PTF Strategy. So now, what is PTF? PTF is just a simple acronym that stands for psychological level, market trend, trend line, and Fibonacci retracement. These three concepts put together has helped me understand the market structure, know what to do per time, know when to place a trade even without checking the news. So let's start with the first acronym, which is the letter P, which stands for psychological level. Now, what is psychological level? Psychological level are those random figures in the market in which the bank pay attention to. I'm going to give you an instance. For instance, you go to an Apple store to get a phone, probably an iPhone 14, and you are being told that the price of the phone is ₦1,000,000. Now, it's usual for you to price the phone, probably depending on your budget though, probably 800k, 850, or maybe 900. Now, it's very rare for someone to price it at 800, 699 naira 55 kobo, because that really doesn't make sense. So the same way you pay attention to those random numbers is the same way the market makers pay attention to those random numbers. So at that particular point, they have already decided this is when we are going to go short, this is when we are going to go long. Now, how can this help you? This can help you because if you plot the psychological level well, which I'm going to show you one of the ways in this video, the market, once the market leaves the psychological level, is going straight to the next psychological level. So once it leaves a point of interest, it's going next to the next point of interest without stopping halfway, right? So now, what is the misconception about this psychological level? The misconception about this psychological level is that I have found people drawing the psychological level differently. For instance, you go on gold and you plot your psychological level probably using the 100 pips interval, which is actually fine. The market might respect it. Now, the misconception here is for you, if you go ahead to use that same pattern, which is the 100 pips interval, to replicate it on other financial markets like GBP USD, Euro USD, the major or the minor pairs. Why is this so? This is because every financial market has their own unique psychological level. Gold may be ranging on 500 pips interval, while Euro USD may be 250 pips interval, UJ may be 150 pips interval. So it's up to you to settle down and find out the psychological level of each financial market, plot them well, then this will guide your trade to know when to leave the market, when to enter, to make your decision per time. So now, how do I then plot the psychological level? I'm going to show you one of the ways in which I plot the psychological level in this video. So this is Euro NZD, and I start to plot my psychological level from the daily because I'm a day trader. So let's go to the daily time frame. Now, one of the ways is using the resistance zone. Now, this is a resistance zone for me, and at this point, decision was made that took this market lower. So I'm going to find a random number that is closer to that figure, closer to that zone rather. So if you look to the right, you are going to notice that 1.84 is somehow close. So I'm going to get my 2, place it, edit it to 1.84. So I'll click the done, so it will snap that zone. Yeah, so it's 1.84, as you can see it at the top right there. So now the next thing I'm going to do is to look for another horizontal line. I like this one because after this point there was the massive impulsive candle, right? This is a massive impulsive candle that came with imbalance. So this particular place, the banks are paying attention to this. This is so this particular place, it's no other work than the institutional banks. So I'm going to find out the random number that is close to that zone. So if you look closely, you'll find out that 1.8 is somehow close, right? That is a perfect figure for me. So I'm going to copy as usual, edit it to 1.8. So it's going to snap that zone. Exactly. So now that is the part for me which the bank pay attention to. So now yours might be different, but it must not be accurate as mine, but you have to just get the zone, right? Now the third one and the fourth one is going to mark if you are right or wrong. If I should plot the third one and is not at a key level, then this your psychological level is wrong. So how do I plot the third one? I'm going to minus the 1.8 from the 1.84 and get the figure. Then I will now minus it from 1.8 to get the ones below. I'll add it to 1.84 to get the one above. So how do I do that? So now if you minus 1.84 from 1.8, you are getting 0.04, right? So now to get the one below 1.8, I'll just have to follow that pattern. Now 1.8 minus 0.04 is giving us 1.76, right? So I'm just going to copy and I'll edit it. Let's see where the market will snap to, right? So if this part is not a key zone, then we are wrong. So let's see. Now that is a key zone. You can see that's where the market got to and start reversing. So now I'm going to do one more just to confirm if I'm actually right with the psychological level or I have to do some edits. So I'm going to copy. Still I'm going to minus 1.76 from 0.04. So I'm going to do that. That is giving me, I think, 1.72, right? So just edit it, 1.72, and I'll click done. Let's see where it takes us to. So let's go back a bit. Now you can see where the market snapped to, right? That is it. So this is one way in which I used to plot the psychological level. So without wasting much time, let's move straight to the next one, which is market trend. Now what is market trend? Market trend is just a pattern in which the market moves, in which the market obeys, right? So basically we have three types of market trend. We have the uptrend, we have the downtrend, and we have the ranging market. Now the uptrend, how do you identify the trend? You identify the trend by, if the next high is higher than the previous high and it follows that pattern, then that's an uptrend. But if the low is lower than the previous low, then and it follows that pattern, then that's a downtrend. But if it's giving you an irregular, you can't really identify if it's uptrend or downtrend, then that is basically a ranging market. You don't really have to force it. It's going to be very obvious, right? So now how can this help you? This can help you in your trading to know, because you don't have to trade against the trend. You have to find the trend is your friend, right? So now, like I previously said, if you paid attention, that once the psychological level help you to guide your trade, because if it leaves a particular level, it's going to the next point of interest. Now if you pay attention, if you look closely, you find that the market left this particular psychological level and headed straight here without turning back. Now at this part, you notice that the market actually left this psychological level but retraced back. So how are you going to avoid this pithole? This is now where you use the market trend, because the market trend, now you have to now identify the trend. Once you identify the trend, you will know how to use the psychological level, because at each psychological level you're only looking to go long if it's a bullish trend. So now let's go ahead and identify this trend. To identify your trend, you now have to zoom out, right? You have to zoom out, then look externally. So now you can say, if you paid attention, you notice that I said when the next high is higher than the previous high and follow that pattern, then that's an uptrend. So basically you agree with me that this is an uptrend, right? So now in that case, all you have to be doing is to buy the market to the upside, right? Because there are much trends to the upside. So now this leads us to the next one, right? This leads us to the next one, which is trend line. So now what is trend line? Trend line is just, it follows hand in hand with the market trend. That is why I put it together under the letter T on the PTF strategy, right? So the trend line works hand in glove with the market trend. Now it just follows back up your market trend, making it like a step in which the market used to go much higher or go lower, right? So now how can it help you? It helps you because whenever the markets come and touch that trend line again, you are looking to go long. If you touch the trend line again, you are looking to go long, right? It just gives you a guide. So whenever the trend is broken, then that means there might be likely be a change of character. That is either going reverse to bullish or bearish. So now how do we draw the trend line? You draw the trend line by connecting the lows, right, together if it's for an uptrend, and connecting the highs if it's a downtrend. So basically we have an uptrend, for instance, so you are going to use the same thing for a downtrend. You just replicate the same process. Now my data is presently off, but what happened previously was in a downtrend move. So this is the first leg that started this uptrend. So that's where I will start to connect my trend line. So I'm just going to get my trend line. Now I will just connect the first one, right? All I have to do is to get the first one and the second one, then I'll just extend it to the future, right? Let's make it to touch it properly. Exactly. So now you can see what I did. I got the first one, then the second one, then I extended it to the future, right? So that is how. Then let's zoom in and see. You can see the market just tapped into our our trend line, and it's already zooming out, right? So this is how to draw your trend line to be really valid. Now there are other ways to draw a trend line, but that is when I'm dealing with multi-time frame analysis. So this leads us to the next one, which is Fibonacci retracement. Now what is Fibonacci retracement? This is one of the reasons why I say the PTF strategy only works for the trending market. Now if your market is ranging, you just really have to avoid it, because the PTF strategy won't really work perfectly fine. But as long as the market is trending, you can make it very well with the PTF strategy. So now the Fibonacci retracement, because the market is trending probably in an uptrend, as the case may be here, all you have to do is to drag it from the lowest point. You drag it from the lowest point to the highest point, then you get the potential point of reversal, right? So for an uptrend, because you are trying to know where the reversal is going likely to end, this is the use of Fibonacci. You are trying to gauge where the reversal is likely to end. Now if that's your point of interest, or your gaze where the reversal is going to end, come in alignment with your trend line, your Fibonacci, your psychological level, then you know that is a key zone, then that has high probability. That's a high probability setup. So now, like I said, we'll drag it from the lowest point to the highest point for an uptrend, then we'll do vice versa for a downtrend, right? So you can see how I drag it. Okay, let's take it to the up, then drag it down, because there's much space lower. So now right here you will see that the market come in alignment with the 61.8, but it came a little bit down. So this is very good for me. I don't like the case where everything is lining up perfectly fine. Your trend line is lining up, your psychological level is lining up, and your Fibonacci is lining up. That is a pile up of liquidity. One has to be exhausted. Either the market come down below your trend line a bit before pumping, or a little bit below your psychological level before pumping. So now your Fibonacci retracement comes a little bit below before pumping. Now right here you can see that the market came a little bit below our 61.8 before pumping. So now right below here is what I call it oversold. Now after that you can see how aggressively the market left the zone. Now remember, like I said, once the market leaves the psychological level, is heading to the next, and obviously the market has left the psychological level, this is where it's going to. But now, how do you take advantage of the PTF strategy? If after the PTF strategy has helped you, to understand where the market is headed, so what do you do next? You can't obviously trade on the daily because it's very too large. So now we are going to get straight to the lower time frame, working down the multi-time frame analysis, so you know what to do per time. So we are heading straight to 4-hour time frame. Now what do you do first when you go to the 4-hour time frame? Because each time frame is very important, and each time frame has its value. So now what you do first in the lower time frame is to wait for an alignment. That time frame has to align before you do anything. So now right, if you look closely, you notice that the market has given us a change of character right here. The market has given us a change of character right there. So what we are waiting for now is for the market to pull back, to pull to the upside. Now another thing you have to notice is that this is now where you now make use of the patterns that you've been hearing. Patterns like the invert head and shoulder, the head and shoulder, double top, double bottom, rising wedge, falling wedge, and all of that. Now it's very wrong for you to find a pattern when you don't know the direction of the market, because you might likely find the wrong pattern. Because in a particular time frame you might see different patterns, right? And you will only be at the mercy of the first pattern you see, and if that pattern is wrong, then your trade is going the wrong way. So now, as we've had the direction of the market, we have the direction that the market is going bullish. Now when we go to lower time frame, we know the pattern to look out for. So if we see any pattern sorry, if we see any pattern that is saying otherwise, we'll just ignore it, then focus on the pattern that is going in alignment with our trade. So right now, if you notice clearly, you'll find out that the market is giving us like an invert head and shoulder right here. This is the left shoulder, this is the head, Then we probably will be waiting for the right shoulder to come in alignment somewhere around here. Then we might be going up. Also, one of the method in which I use to find out a pattern easily is to drag it from the first point like this, getting a trend line and wait for the market to break. Now you can see the use of trend line are vast, right? The way I use trend line are vast for different methods to get a breakout, to get an entry, but that's a topic for another day. So now the market has broken out of our trend line and given us a change of character. This is a valid trade for me. So now, what do we do next? We are waiting for the market to pull back. Obviously, the market is not yet there, but what I'm expecting for the market to do is to give us a correction move, like coming down in the correction phase. Then what we are going to do is to do the same thing we did on the 4-hour. We draw a trend line from the top, to the lows, wait for a breakout and also a change of character. Now this is going to be on the 1-hour. Then once that change of character happens, that's the alignment of the 1-hour, we are going to the 15 minutes to find an entry and trade it to the upside. Now, if that's been said, let's talk about where we are going to place our take profit, right? So now, where are we going to place our take profit? Now, in using the PTF strategy, I always use the X liquidity, the Fibonacci liquidity to target for all my trade. Now you notice that I have a part that is calling X. So this is always the X liquidity, and this is where I always target for all my trade. Now before we head straight to talk about that, this is what I'm actually looking at. You can see the 61.8 is coming in alignment with our right shoulder. So it might come a little bit below the 61.8, tapping into the 1.76 Fibonacci psychological level and give us a pump. So where the market stopped before retracing is not our problem. All we are waiting for is the market has to give us a change of an alignment, that is a change of character in the 1-hour. That is when we are ready and sure that the market has tapped into whatever other block or whatever it's looking for, right? So we are waiting for that impulse to the upside, giving us also a change of character, right? So the market must not change character. Remember, it must not change character in a correction way. We need to see that impulse, right? That strength to the upside. So that being said, going back to talking about our take profit, I always target the X liquidity. So now, if we go back to the daily time frame, you remember that I drew the Fibonacci retracement, right? So I drag it from the lowest point right here to the highest point. So if I should do that properly, take it from the highest to the lowest. So now you will notice that the X liquidity of this daily time frame is still much higher, and that is where I'm going to be targeting for my overall TP. But first of all, we are going to be targeting the 1.8, our first TP. Second is 1.84, and which is the daily swing high. Then the last TP is the X liquidity of this, which is a little bit, it always comes in alignment with a little bit below the next psychological level. So yeah, that is it about USD. So yeah, if you find the video anyway helpful, I'm excited to let you know that I have put together a course where I'm going to be giving you a detailed all the way from introduction to Forex, even though you're a beginner, down to the introduction to PTF strategy, how to plot the psychological level. I'm going to be giving you different formula irrespective of the market condition. You're able to plot your psychological level perfectly fine. Guides to market trend, how to even understand market trend, even trend line strategy to avoid manipulation, how to use the Fibonacci retracement, psychological level patterns, right? How to manage your trade, entries techniques. I'm also going to be taking your multi-time frame analysis to teach you the importance of each time frame and how to utilize it well. Trade management, when do I break even on my trade? Psychological management, how to keep your psychology in place, not to over risk. I'm going to be giving you even the live trades where I'm going to be putting all this strategy together in different videos, so you are going to understand the concept in details. I'm supposed to give you a walk down through the course on Telegram, but due to the Telegram security policy, you can't do a screen record or even screenshot on the app, right? So that's why I'm giving it orally here. And also, you're going to be getting a lifetime access to me, where you, after watching the course, you can ask me any question and I'll also answer your question to throw more light on whatever you're confused about. Also, you're going to be getting a lifetime signal from me, at least 0 to 2 trades per week, right? 0 to 2 signals per week for a lifetime, right? So I'm going to be giving you all these assets, right? So you want to take advantage of the startup price of $50. It might increase anytime soon because I'm giving out a lot of information right here. So if this is something you are looking out for, every information you need concerning the mentorship will be in the description box. And yeah, that is it about this. So thank you for watching, and yeah, I'm always active on Instagram and Miracle Anna your one. So see you on the next one. Don't forget to like and subscribe, comment below your thoughts about the video, and yeah, I'm going to attend to your video. I'm going to attend to your your comments. I'm going to reply to all comments. So yeah, that being said, see you on the next one. Peace.
Purple flame on the beat.